But we do want to bring in an analyst for this, CFRA analyst Ken Leon, to get his immediate reaction to this. Ken, what do you think? It looks like the stock's down a little bit, but it does look like stronger than anticipated numbers.
Oh, it's great to be here. And I think the market wants to know if the consumer is back. JP Morgan gets 85% of its revenue from the consumer and the investment bank. This is part of the reflationary trade. So JP Morgan is a bellwether. You know, Becky, on the quality of earnings, I wish I could see whether there were any loan loss reversals from the reserves. That will kind of hone in on the quality of the earnings. But I think this is probably going to be a solid quarter, as reported.
You know, there had been all of these thoughts that the banks have done very well in terms of controlling what they could control. We watched them release a lot of the loans that they'd saved up for those the reserves that they'd saved up for the bad loans that never showed up. Banks have been pretty good at doing things like passing the stress test from the Fed. So a lot of the good news kind of baked into this. The question becomes what happens now, especially when you look at these declining yields for treasuries. Is this a case where, valuations have built in? JP Morgan, I think, is up about 25% for the year to date versus just 16% for the S&P 500. So you've had a lot of good things happen, but you've had stocks that have kind of run up along this way, too.
We have. You had this parabolic move in the stocks from last year. We've seen, some optimism on rates. That's not going to happen. So you got to make it up in volume, especially for the consumer. So I think it's going to be a steady climb from here out over the next 6 to 12 months. Second half, we need to see stronger than the first half from the traditional bank. And then we'll probably be getting back to the narrative of an improving yield curve on rates for 2022. There's also a return of capital. So if the overall market begins to fade, JP Morgan brings enormous power with share repurchases and dividend increases after the Fed stress tests. So I think it's just going to be a little bit more of a quiet climb, not what we saw either in the last quarter or last year.
Ken, to your point about, investors wanting to see if the consumer's back, JP Morgan saying that credit and debit card spend up 45% year over year and up 22% from 2 years ago. So the pre-COVID level, that obviously is pretty healthy. Wondered about, how the capital markets results might fit in versus expectations. Total markets revenue down 30%, fixed income markets down 44% in the quarter. Is that in line with what people thought we might see?
It is. And I took a close look at the investment bank over the last few quarters. The second quarter typically is weaker than the first being the strongest. We have kind of a seasonal soft third quarter, and then it's the race for bonuses with a strong fourth quarter. The pipeline for IPOs and equity underwriting is enormously strong. We've hit record first half results in mergers and acquisitions global for M&A. M&A is here much stronger than last year. So then again, it's really the last component of trading, which obviously might have eased. Trading might have eased.
That stock is only down by about 1% now, a decline of $1.60. How do you kind of look at JP Morgan just in terms of the other banks that you're also watching? What comes in as your favorite?
It's a great question. And among bank analysts, the debate is, do you go with a more traditional commercial bank or one that's an investment bank? Goldman Sachs is also reporting today. We have a strong buy on Goldman as well as Morgan Stanley. We just think they have a lot more lift across all their businesses, whereas a JP Morgan's a hybrid. And then tomorrow we got Bank of America, Citigroup, and Wells Fargo. They're either more of a traditional bank, global or U.S., and they have to rely much more on commercial and consumer loans.
Shepard Smith here. Thanks for watching CNBC on YouTube.